Anand, let's look at what's in store for the next 3 or 4 quarters. We started off this war saying that, oh, it will get over in a month's time and it's going to be little impact. But external headwinds continue to be there. While, first quarter numbers could be, something to cheer about. Do you think that that can be sustained if this West Asia crisis continues?
I think we'll have to be living with the uncertainty, because we were hoping that things will get better soon. But certainly I'd say the positive is we didn't expect crude to come down to $70 when there was positive news either. So to that extent, even if crude stabilizes at 80, 85, price passing on is happening to a certain extent. So I think after Q3, margins will stabilize. Will there be uncertainty? I think there's enough external factors, whether it is uncertainty of rainfall and El Nino impact and other things. Currently, the most recent uncertainty that we are experiencing is that of container availability for exports. We are finding that exports, while demand is resilient, we are finding that we're just not able to export because a lot of the containers have gone from China to the US because of changes in duties that were going to happen between the two countries. And now the reverse containers are just not coming back. So I think we just have to be agile. I'd say internally, say in our company, we've created a concept of war rooms where you have a small team of 3 or 4 empowered CFO, CHRO, and COO kind of getting together and taking very quick decisions on procurement, on logistics, supply chain management, Forex, and all of that as well. So this is something which I'd say is part of life.
Ms. Kedwai, foreign flows, you look at that very closely from a private equity and from a foreign portfolio investor's point of view. Whole of last year, we've seen a lot of outflows coming in. Now it seems the selling is, stabilized a bit. But do you think the growth is good enough for foreign flows to come back?
So I was just looking at these numbers, and if I have this right, only 20% of our foreign flows are actually FDI. The rest is private equity. And private equity, much as I love it and work in it, is shorter term. By nature, 5 to 7 years, if you're lucky, and it's from the sovereign wealth funds, maybe 10 years. FDI is really what the country is seeking. And I think it is the space which we absolutely have to focus on. I see reasonable success in electronics. So clearly what that agenda government had, and if we can replicate the Suzuki model, where Maruti, when it got set up, had this huge bunch of auto ancillaries it encouraged. Can we pick industries in the same way and force the supply chain to Indianize over time, so that we create that whole bank of what we get now, the auto ancillary sector, and what we are aiming to do in the electronic sector. So the FDI policy, I think, is also pragmatic now vis-a-vis China and FDI, in that to enable Chinese companies to set up here in a form that is attractive to them, so whether 49% ownership works or not remains to be seen. And I say this because our dependencies are huge on China. We can't wish it away. So can we make them part of our own growth and expansion, as against being the ones that come in with the cheaper equipment in particular? I think the whole area of capital equipment and import will remain an issue as long as we see China as a competitor and get reliant too much on a Western world which is overpriced, and do not develop our own solutions therein.
So co-production in India, but I think Vijay will have an issue with the kind of dumping which is coming from China, right, for your industry?
Yeah, unfortunately, what we've seen in the last few years in many sectors is actually other countries making for India, rather than we making in India. So what we strongly advocate in FICCI is making in India. Our 4 priority sectors, which Anant has championed, which is R&D, supply chain resilience, technology, and manufacturing and innovation, is something built around Viksit Bharat, which needs make in India. Unfortunately, we are not seeing enough FDI, enough money coming in and investing on the ground. In fact, we have a different situation now, Sajid, where people actually, FDI that has come in invested in assets on the ground, brands on the ground, have actually taken advantage of the very buoyant stock market and listed their subsidiaries and taken capital out, which is quite a strange situation. It doesn't happen in most other parts of the world where people list their subsidiaries. So we're seeing a situation where the buoyant stock market has actually led to a challenge for India. So we need, I guess, it needs some course correction and thinking by the government. How do we get more investment on the ground? The one thing we have going for us is our long-term potential is amazing. No other country has this level of population and growth forecast for the next 100 years. How do we take advantage of that and make in India?
And Mr. Panda, I mean, are you also facing that challenge with respect to the kind of dumping coming from for the metal sector there?
In my particular sector, which is ferroalloys, no, we don't face that challenge. Fortunately, in fact, we are, it's a large foreign exchange earner. But I have a very, a very strong view on dumping and where do you find that balance? Because life is all about finding balance, if you ask me. Because, I mean, of course, there is, you have to balance the end consumer's requirements versus that of the producing entity. And, swaying in any direction too much is from a policymaker's perspective is not correct. So where is that defining, where is that sort of a fulcrum on which I think one should balance it? I think it's plain and simple based on fair competition, because I completely sympathize with what Vijay made a point, which is that, Indian industry today is confident, it's capable, it's world class. What you can't take on is unfair competition. So, I mean, as long as there is a level playing field, I think Indian industry, and FICCI has been advocating this for a long time, is ready to play on the front foot and face competitive challenges, but provided it's a level playing field and not unfair subsidies or things of that sort. But having said that, as I said, one has to find that, from a policymaker's perspective, to balance that between saying that, if there is a competitive edge that downstream industries can get in a manner which is legitimate and not due to unfair subsidies, then don't take that away. But be careful about, not policies which result in core industries facing unfair challenges and struggling to keep up or struggling to invest, which will then come to bite you sooner rather than later.
Mr. Sobhani, one of the key challenges for your sector was the supply chain, especially gas coming in. Do you think the industry has now learned a lesson of how to ensure that you have an alternate supply chain of gas and others coming in?
Actually, unfortunately, in this industry, there's no substitute for gas. The kilns, the furnaces that heat these products and bake them, can only work on gaseous fuels. So you have LPG and you have gas in whatever form. Rightly, the government of India cut off the supply of LPG and prioritized domestic consumers. And that's absolutely correct, because otherwise kitchens would not run. So we were left only with the supply of gas. And gas was disrupted to reasons beyond the control of our country and its government. So frankly, I think they managed it well. And now I think more supply chain has developed. There's a lot more gas coming from the US to offset the lack of gas coming in from LNG coming in from Qatar. I think it's, we have discovered another source of gas, and India has signed many contracts for significantly raising the supply of gas from the US. It costs a little bit more because of the extra freight, but I think it's worth the risk, and industry definitely has no problem paying for the extra cost because it prevents disruption to the industry. So we are go, no go. We either run or we don't run. In that case, cost is immaterial, frankly.
Mr. Korakiwala, supply chain is something which pharma has done well with. Actually, after the COVID thing, you've been able to. Many of the companies, including yours, have been able to do a good supply chain management. What is the lesson that you have learned from there, and how has that come to help you in this crisis?
See, for pharma industry, there is a good industry in India of making bulk drugs. And also we import intermediate of bulk drugs, mostly from China.
True.
And from that context, I think it has been reasonably stable situation. And that is, sometimes government feels For strategic reason, you should make some of those important bulk drugs in India. But I think what we are doing is we are barking the wrong tree. Because what we are doing really is creating considerable value-added product. You make the final product, you send the formulation, the value creation chain, it is very significant. So to invest in yesterday's technology or yesterday's idea is no good. So I think one should encourage more on the area of innovation and research. And I think our industry's differential would be research. Because we succeeded in technology part of it. It's not pure generic, because there is a lot of technology, there is a lot of work done. Now I think we should move up the chain as an industry in terms of research in the higher end of technology, maybe new drugs like we have been doing and spent so much money. And I can tell you in our areas of research, antibiotics where we are there, the big pharma had given up research when 2-3 decades earlier. That's why we entered. Today they are getting out of the business because it's not as big ticket item, as remunerative as it is. For us, it is very good. And therefore, one can build in these new areas. We have to find a niche in our industry. It's an industry with so many things you can do. And there are always vacant spots available. And that is where one has to creatively find niche, and we can become a very important players in times to come.
Mr. Gandhi, you're in a industry which is emerging and where a lot of investments is now going animal health care. And even some of the FMCG companies are getting into some of that segment. How do you look at what Mr. Korakwala said, that there is need to be an R&D of emphasis which has to be there on value-added creation for the industry?
R&D is a very important factor in biotechnology, in vaccines. What has happened is that now companies are investing in India, but over the last so many years, companies in Europe, in the Western world, thinking, with their good balance sheets because of the hefty margins, etc., they have always been reluctant in transferring technology to India. In biologicals, but slowly India is now developing its own. We have the research institutes, the government research institutes, few private research institutes, so which is now taking the development work ahead. And yes, it is going a little slow, I must say, because the technology transfer from these institutes, it's not as seamless as what one would get it from a Western country. But then, of course, that is if you get the technology. So having said that, I think India is progressing reasonably well towards building up its own technology. There are many scientists who are now individually, see the world, even in the Western world, there has been a lot of recession, etc. So there are many independent entities, individuals, companies who are now willing to give technology, willing to give seed viruses, and those deals are much more cheaper and much more accurate, because then you are dealing with a few individuals and you are getting the technology. So it's headed towards India getting technology, building technology, and becoming more stronger in biologicals.